Welcome back to HTR. Well, as promised, Bansal Wires Industries, which reported a good set of Q2 numbers, the company saw a strong operational performance as margins sustained about 7.5% for the second consecutive quarter. Pranav Bansal, the MD and CEO at Bansal Wires, joins us now to discuss more. Good afternoon, Pranav. Thank you so much for joining us. Well, in Q2, hygiene check. What are the volumes as far as this particular quarter was concerned? Q3, how are volumes looking, and where do you expect to end FY25 in terms of volumes?
Hello, thank you for having me. So in Q2, we did about 80,000 tons of volume in all our three sectors, which is high carbon, low carbon, stainless steel combined. For Q3 as well, we're looking for a good growth as we have been doing in the last quarter and the quarter before that, mainly coming from consolidation and us setting up one of the largest facilities of wires in Asia, which is also being operationalized and is set to be fully operational by the year end. So we are looking at good numbers in volume, good growth in volume in quarter three as well as quarter four.
What is the growth? Your installed capacity is close to 320,000 tons per annum. What do you intend to produce and sell this year?
So as far as capacity goes, we are looking at an installed capacity of 6 lakh tons by the end of this year. Therefore, you see some growth coming every year. And our target for the next 2 quarters is also to grow at the same pace as we have been in the last 2 quarters.
Right. Pranav, talk to us about the export contribution as far as H1 FY25 is concerned. Are you witnessing a slowdown there? And even when we look at historical trends in the last 3 years, there appears to be a much lesser contribution of exports as it was, let's say, 2-3 years back. And what is the targeted export contribution by the end of FY25?
Well, you're absolutely right. In the last 2 years, our export has not done very well, mainly because of the geopolitical situation. And what you also need to understand here is that 75% of our export comes from only Europe and US. And those 2 areas have not done well in the last 2 years. Therefore, you see that reduction. Although it has already picked up in the H1, we have done about close to 10% export in quarter 2 as well. We are looking for good numbers coming in for quarter 3 as well as quarter 4. Although our business model is not very dependent on export, it is more of a domestic business model. And even in domestic market, we already have more than 5,000 customers. So we're not really very dependent on one single customer because we've diversified to a large extent there. But still, export has been a good area for us, and we continue to focus on that.
Could you give us a sense of the expected utilization of your Dadri plant? Like you said, by the end of this year, your installed capacity will go to 6 lakh tons. In the second half, what is the expected utilization there? And if you could also throw some light on the EBITDA per ton in the second quarter, and how do you anticipate that to move over the next couple of quarters?
So as far as EBITDA per ton goes, if you take our sales, which is about 80,000 tons for the quarter, and we did about close to 68-70 crore of EBITDA. So you get the figure right there, right? 8 to 9 rupees a kg is the average blended EBITDA for our products. We are looking at a good volume growth, definitely. In the first 2 quarters itself, we have done good growth as compared to the last year. Same kind of a trend we are looking at for quarter 3, quarter 4. And if we follow just the growth that we've done, I would say that we should have at least 10% more every quarter in volumes.
Okay, give us a sense of how do you expect to see sales mix changing. So by the end of FY25, currently we understand low carbon at 57%, high carbon 22%, and the remainder being stainless steel. End of FY25, end of FY26, how do you see this particular mix changing?
So FY25, what we are looking at is more mix coming from low carbon. This is also coming from the consolidation that is happening within the group. Within the last quarter, we have consolidated one of our group companies, which is Bansal Steel Power, which is now a 100% subsidiary of Bansal Wire. In this quarter, we have taken a target to consolidate all sales coming from Balaji and Bansal High Carbon. Therefore, these 2 companies making only low carbon will come to Bansal Wire within the 3rd quarter and the 4th quarter. So by the end of quarter 4, we are looking at a good increase from low carbon. High carbon and stainless steel will see a general 5, 7, 10% kind of increase.
All right, quickly before we let you go, Pranav, finance cost has come down slightly from 6.25 crore to 5.5 crore per quarter. What is the likely run rate going here, given that you are intending to be debt-free post your IPO? That's what your stated intention was. And what are the return ratios that you're targeting, both on ROE and ROCE?
So the proceeds from the IPO came to us by end of July. Therefore, you see some contribution coming even in the interest cost within the second quarter. You will see a major change here within quarter 3 and quarter 4, because after the proceeds of the IPO, we are already today kind of debt-free.
Well, thank you so much for joining us and throwing some light as far as how exactly expect H2 to pan out. Well, moving on, we'll slip into a short break. We will get you more on markets and stock-specific action on the other side.